Folks, it's January 1st. What are we looking at for the first week of 2023? So if you don't know already, Monday is a holiday. The markets are closed. That rolls us right into Tuesday. We're going to get a report on consumer spending as an economy based on consumers. We will start to see right off how the holiday season was, whether or not consumers are still spending like drunken sailors or are they conserving. Wednesday, very important report. It's called the jobs report or JOLTS report, job openings. We're going to find out what a quit ratio is. Is the jobs market showing any pain? Are openings falling? I believe it was 2 months ago when we saw job openings fall by almost 1 million. Folks, the Fed will be looking at this report. It will be very, very important. Thursday, we get our first look at December job creation with the ADP report. We also get the jobless claims for the week, and we will see if those are ticking up. Last week, I believe, was 200,000. And then Friday, the biggest report of the week is what were the December job creations. Expectations are for 200,000 jobs created in the month of December. If it comes in higher, that will be bad. This is good news is bad news all over again. If job creation is north of 200,000, that will be a sign that the Fed has more work to do. If it comes in low, it will be a sign that the Fed is winning and maybe there is some light at the end of the tunnel. We should also be looking at average wages. Again, remember, wages are starting to show increases at a nominal level, or I'm sorry, at a real level and a nominal level. For much of 2022, wages actually were below inflation. So you were not getting ahead. The last month, it actually went above. So we should watch that. Labor force participation is also something interesting to watch. It has been trending down, and we do need that to trend up. And then finally, unemployment rate. Will the unemployment rate tick up from 3.7% going forward? In addition, what we're going to look for this week, or at least I am looking forward this week, is are there any pre-announcements? We just finished Q4. Are any companies going to come out and say, whoops, didn't deliver, we missed expectations? Are there going to be any large layoffs? We see that Goldman Sachs, for example, has 8% or 4,000 folks. Who else? We saw some rate increases at the end of the year or end of last week. Will those settle out? Was that just end of year, management of numbers and whatnot? And I will be looking at oil. I don't trust any information coming out of China, but I do trust the price of oil. Is China booming or declining? What is going on really with the world economy? Oil is my sign for that. China manufacturing did have a report that came out and saw the sharpest contraction in 3 years, which I thought was very interesting. They just obviously they got rid of COVID zero, and it appears based on this that a lot of people are sick and not going to their manufacturing jobs. A lot more to come on this. We will see what goes on in the month of January over in China. Billionaire Jeff Gundlach is talking about the chances of a Fed rate hike, a rate cut, Fed pivot in 2023 being 75%. I think expecting a Fed rate cut in 2023 shows how desperate you are and how positioned you are. Remember, when billionaires complain, it's a sign. Remember when we warned you about Elon Musk complaining and we warned you about Barry Sternlicht, I believe, complaining? Both of those individuals reported some pretty negative things after they complained. Billionaires complain. It's a sign that there's some pain in the system. I found 8 experts that talked about 2023 that I thought I would share with you. Michael Burry, often quoted being rather negative, frankly. Michael Burry is saying, I expect a multi-year recession. Wow, multi-year recession. I could certainly see 11 or 12 months. I believe this recession will be longer than most. But Michael Burry, multi-year recession. Elon Musk, Fed must cut immediately. Mark Zuckerberg, we were wrong about the economy. It is time to focus and tighten our ship. Folks, I believe a lot of tech companies and finance companies overhired. They had expectations for the future, which are proving not to be true. So we're expecting some tech and finance layoffs. Andrew Jassy, the next 2 years is going to test the economy. Larry Fink, we are entering an economy that is going to feel like malaise, just stuck in the mud. Leon Cooperman, recession will be longer than normal. I agree with that. I would also say shallower than normal. Leon did not say that. That was my opinion. David Rosenberg, the next 12 months are going to be rough. David, weren't the last 12 months rough? At least the last 9 months rough. So another 12 rough months. And then finally, Christopher Smart, stagflation is coming. You can actually listen to Anna Kelly. I believe Anna Kelly has been telling us that for the last month or so. And then finally, Tom Lee, the ultimate stock bull. Tom Lee expects the S&P 500 to be up 20%. Wow, Tom. That's a bullish call. He does highlight that sticky wages and higher interest rate or hawkish Fed could be a problem. If wages accelerate, the Fed may have to do more and cause some pain. So, folks, that's what I got for you today. That is the daily financial news for January 1st, Sunday, January 1st. Have an amazing day, week, month, year. Log in one rental at a time. How to get started one rental at a time. Like, subscribe, comment. Take care of yourself. Bye-bye.